All right, what to do with your extra cash? That is easy. Give it back. Buybacks are the subject of today's single best chart. All right, here's what we're looking at. Since the current bull market began in 2009, a gauge comprised of 100 companies on the S&P 500 that repurchased the most stock. That rose about 350%. S&P 500 alone rose about 200%, right? So obviously not hard to figure out why that's going on. But here's what may change, Tom, which is that I'm looking at a note right now from HSBC that says that this cannot go on politically forever. At some point, Congress will end this party and make it more difficult to do this.
And within the research, it's not new. It's a look back to what used to be, right?
Yeah.
Yeah, I mean, I think it's a huge, huge debate here. I know Mario Gabelli, for one, really likes those share buybacks. I mean, for the government to restrict this, it would be a whole new regime, Michael Purves, wouldn't it?
Yeah, that's an interesting take. Certainly, you'd think the markets would be the determinant of whether buybacks would continue or not. You know, the thing, we all look at, of course, is how much is the credit quality of these companies getting degraded by these share buybacks? And
the answer is not.
It's, it's funny. Within the S&P, if you look at certain credit ratios over the last 3 years, they've actually been pretty flat. They have not gone weakened. Within the the Nasdaq 100, you have seen some, but there was a lot to give back.
Won't the Federal Reserve just take care of this, though? Because once interest rates go up,
exactly. This is a function of what is your cost of equity? Where's your cost of where risk-free rates? Where your bonds trading at? Yeah. So if that drives this. Not I'd be interested to understand the political calculus here, but I think it's really market forces.
The political calculus is this is a really informed minority opinion, is how I would put this, and it may get there. I mean, don't ever say
never.